You know, in the world of Bitcoin, some numbers they matter more than others. And right now, one number in particular is causing a massive stalemate. $89,000. Today, we're going to dig into why Bitcoin seems to be hitting this invisible wall and what it all means for the market.
So yeah, this is the question on literally every trader's mind. The price has been dancing around, testing, and then pulling back from this level for weeks now, creating this really frustrating standoff. So what's the deal? Is it some technical ceiling, a mental block, or something else entirely? To figure it out, we first need to get into the psychology of it all.
Okay, so the first piece of this whole puzzle is what we call a psychological barrier. In investing, we all have this tendency to anchor our decisions to big, round numbers. It's just a mental shortcut. And because $89,000 feels more significant, it kind of becomes a self-fulfilling prophecy. It turns into a hurdle that's way harder to clear than some random number like, say, 88,752.
All right, so to really get to the bottom of this mystery, we've got 3 key clues to follow. And our first one? Well, it comes from the price charts themselves. They really paint a crystal clear picture of a market that is locked in a fierce battle.
So, when you look at this, what's so interesting is just how clearly it lays out the battlefield. You've got this really strong ceiling up top where sellers are digging in, right between $90,800 and $91,000. And then, just below, the buyers have set up a floor, a line of support, around $87,000 to $88,000. And smack dab in the middle of it all, that's our pivotal zone, the $89,000 psychological battleground.
And this image, it just perfectly sums up the situation. It's like a classic tug-of-war. Every single time the buyers manage to push the price up towards that resistance ceiling, the sellers shove it right back down. And every time the sellers try to drag the price down towards support, the buyers step in and say, "Not so fast." The result is this fragile, super tense equilibrium, where neither side can get a clear advantage.
Okay, so that tug-of-war we see on the charts, that brings us right to our second clue. Who's actually pulling the rope? We're shifting our focus from what is happening to who is making it happen. And as it turns out, there's a huge split between the market's biggest players and, well, everyone else.
Wow, I mean, this chart right here shows a pretty stunning divergence. On one side, you have the whales. These are the huge investors holding over 1,000 Bitcoin, and they are buying up a ton. But on the other side, you've got retail, or the smaller investors, and they're selling off. These two groups are moving in completely opposite directions.
You can really think of this as the Great Divide. You've got what people call smart money on one side. That's the whales. They're showing real long-term conviction, and they're seeing all this sideways price action as a great buying opportunity. Meanwhile, the crowd seems to be reacting more to short-term fear. As momentum fades, they're selling, and in many cases locking in their losses.
And the cost of all that fear, it's just staggering. Recent analysis shows that short-term holders are realizing an average of $403 million in losses per day. Now, this isn't just numbers on a screen. This is a massive wave of real selling pressure that the whales are currently soaking up.
So, this really brings us to a crucial point, and it's summed up perfectly in this bit of market analysis. This split between smart money and the crowd, it's not just some interesting little detail. Historically, a divergence this big has often been the signal that comes right before a major, decisive move in the market.
All right, this brings us to our third and final clue. All those broader market forces that are kind of swirling around just beneath the surface. These are the undercurrents that are adding all these conflicting pressures to our stalemate.
Yeah, just look at this dashboard of signals. It's no wonder the market is completely stuck. On the one hand, you've got some pretty bullish signs. Bitcoin miners, for instance, have totally flipped from selling to hoarding coins, which should reduce supply. But that's being canceled out by this wave of bearish signals. Hundreds of millions of dollars are flowing out of Bitcoin ETFs. The derivatives market is super cautious, and overall market sentiment is just stuck in extreme fear.
Okay, so we've got our 3 clues. The technical battle on the charts, the huge divergence between whales and retail investors, and these conflicting undercurrents in the broader market. So what happens when we put it all together? And the verdict? It's a perfect stalemate. That $89,000 barrier isn't just some random line on a chart. It's the exact point where these two immensely powerful opposing forces are colliding. The bullish buying from the market's biggest players is meeting head-on with widespread bearish fear and technical resistance, creating this incredibly stable, yet very, very tense equilibrium.
So, the big question is, what should you be watching for to see who wins this thing? Well, for the bull case, keep your eyes on that $90,800 level. If the price can break above it decisively, especially with continued whale buying, that's your signal.
For the bear case, the big warning sign would be a break below that $87,000 support level, which would likely be driven by more retail selling and money flowing out of ETFs.
And all of this leaves us with one final, absolutely crucial question. Is this great divide between smart money and the crowd a historic buying opportunity? A chance to get in alongside the whales before the next big move up? Or is this just the calm before the storm, where that overwhelming fear finally wins out and breaks the market's support? The answer is probably going to define Bitcoin's direction for months to come.